Hey there, Ashley Fields here with Fields Accounting Firm. The IRS has increased the standard mileage rate effective July 1st of 2026 and ending December 31st, 2026. So in this video, we are going to discuss the mileage rate increase. This includes medical and charity, as well as business standard mileage, and how to calculate your standard mileage rate for the whole entire year to account for the increase. And we're going to also discuss if it's better if you are a business owner to take the standard mileage rate or to claim your actual business vehicle expenses. You can't do both. So let's jump in. The IRS has announced their 2026 mileage rates increase. This is only effective July 1st and it ends December 31st. So if you are self-employed or a business owner, the mileage rate increase is 76 cents per mile. If you are driving to charities, to volunteer, the increase is 14 cents per mile. The medical miles, in addition to moving, unfortunately, moving is only for military only. The mileage increase is 23.5 cents per mile. Now, prior to July 1st of 2026, you'll see here on this table that the business use mileage was 72.5 cents per mile. Charity use is 14, which is pretty much the same. The only increase is for medical or military moving, which is it was 20.5 cents per mile. So we're going to show you how to calculate your mileage. So if you are not a business owner and you did have medical moving miles or you volunteered with a charity, we're going to show you how to calculate your mileage. So let's go into this Word document and I am going to show you how to calculate. Here's how to calculate the 2026 mileage for the whole entire year. Keep in mind that there was no charity mileage increase. So if you were driving back and forth to any charity to volunteer, there is no mileage increase. It's the standard 14 cents per mile for the entire year, starting January 1st, 2026 and ending December 31st of 2026. So in this example, how to calculate the charity use miles at 14 cents. For example, if you've driven 1,000 miles for the entire year, you'll calculate the 1,000 miles by 14 cents. Now be sure before you do your calculation that you actually move your decimal point 2 spaces to the left. So it'll be 1,000 miles times 0.0014, and the total amount that you can actually claim is $140. Now this is just for an example only. You may have had more than 1,000 miles for the entire year or possibly less. This is just for a scenario on how to actually calculate it at 14 cents per mile. So now that we've completed the charity use, let's move along to medical and military. Medical and military mileage rates are exactly the same. As mentioned before, you cannot claim military mileage if you are not active military, okay? So here's how to calculate. January 1st, 2026 through June 30th of 2026, the mileage rate was actually 20.5 cents per mile. So in the same example, we're going to calculate at a total of 1,000 miles, but we're going to break it out for both scenarios here. So like I mentioned before, it was 20 cents per mile, 20.5 cents per mile, effective January 1st, 2026 through June 30th, 2026. So if we calculate 500 miles here times 20.5. Remember, as I mentioned before, if there's a decimal behind that cent, you want to make sure you move it to the left 2 spaces. So you'll be calculating 500 times 0.205, which equals $103. So this is just for anything the months before June 30th of 2026. You have to now calculate the other portion of the year when the IRS increased the mileage effective July 1st of 2026. Now, the mileage increase for medical and military effective July 1st was 23 cents, 0.5 cents per mile. Okay? So again, you have to move the decimal 2 spaces to the left. So you'll calculate 500 miles times 0.235, which equates for 23.5 cents per mile, and that total is $118. So now you'll have to combine both calculations. $103 for anything before June 30th plus $118, which included the mileage increase effective July 1st, ending December 31st, which came out to be $118. When you calculate these two together, your total yearly mileage is $221, okay? Now let's move along to business mileage. January 1st, 2026 through June 30th, 2026, your business mileage was 72.5 cents per mile. You will have to, of course, before you calculate your mileage, move that decimal point 2 spaces to the left. So you'll actually calculate your total mileage by 0.725. So in this example, we're going to calculate 500 miles by 0.725, which equals $363. Now, to account for the mileage increase, we are going to calculate 500 miles by the mileage increase, which is 70 cents per mile. And be sure that now in this scenario, you don't have to actually move the decimal point 2 spaces over for the mileage increase of the 76 cents, because the decimal point is actually before the whole number. This is just basic math or arithmetic 101, okay? Now, for the mileage increase, you don't have to move the decimal point. You'll leave it at that 76 cents per mile, but you'll calculate that by your 500 or whatever mileage that you have for this portion of the mileage increase. And for my example, it's $380. So yearly, we're going to calculate the $363 plus 380, and for the whole entire year, it's $743. Now, here's some tips for you. If you are claiming mileage on your taxes, I suggest that you keep a mileage log. In the event that you get audited and the Internal Revenue Service want to prove your expense that you've claimed on your tax return, you want to make sure that you have some type of mileage log. I also advise that you try to keep up with your mileage log every single month, every single week if you can. Now, there's nothing wrong, of course, if you wait towards the end of the year to account for all of the mileage that you've driven for the whole year. It's just that in my professional accounting opinion, it's best to keep track of your mileage as you drive these miles. Because one thing I've noticed that when clients come in and file their taxes, they always either overstate their mileage or understate. And to avoid doing that, it's best that you keep a mileage log. If you are looking for a mileage log or free template, you can visit my website at fieldsaccountingfirm.com. Under appointments, you'll actually see the personal tax checklist or the business tax checklist. And on the last page of both of those checklists that I mentioned, there will actually be a fillable mileage log, or you can find one online for free. Mine is free as well. Now that we've went over the mileage increase rates and how to calculate your mileage for the whole entire year of 2026, this is more so for business owners, this final portion, and we're going to discuss if it's best for you as a business owner to calculate the standard business mileage rate or to actually take your actual business vehicle expenses. You do not get the option of claiming both. You'll either claim your standard deduction or your actual business mileage rate. Now, a lot of things that I see errors on returns for is taxpayers thinking that they can either do both or they can alternate between taking the standard mileage rate or the actual vehicle expenses. Now, the IRS does have stipulations on how to go about this. And so before I provide you any tax strategies, I want to ensure you that all of my tax advice, all of my accounting advice actually comes from the actual tax code. And so if you are looking to back up my claim, I'm actually going to share the link on this video on where to find exactly what we are discussing in this video. Okay, so let's jump in. Now, so if you are a business owner, I am pulling this information from the 2025 instructions for the Schedule C, okay? Being that we are in 2026, there are no major changes to this instruction form. But if you download this publication on the IRS's website, again, like I mentioned before, I'll provide the link in the description box of this video on where to find it. You'll actually jump to page 6 on this publication, okay? So let's go right to page 6 and I'll show you. It's actually under part 2 expenses and line 9. And it reads, you can deduct the actual expenses of operating your car or truck or take the standard mileage rate. Like I mentioned before, you don't get the option of doing both. You can only do one of these two options. This is true even if your vehicle for hire, such as a taxi cab. You must use actual expenses if you used 5 or more vehicles simultaneously in your business. And we'll discuss this part in a whole separate video. But for now, we're just going to be talking about taking the standard deduction and or actual business expenses. You can't use actual expenses for a leased vehicle if you previously used the standard mileage rate for that vehicle. Now, this means that if you actually already claim repairs to your business vehicle, you can't also group your mileage. Like I mentioned before, which is stated in that first line, you have to decide which one that you're going to claim. Now, it's advantageous of you to rely on your accounting to determine, hey, is my standard deduction for miles more than my actual expenses? And that's how you'll determine which route that you can go, because I advise you to take whatever expense is the highest, but like I mentioned before, you can't do both. Now, here are some allowances for you. It says that you can take the standard mileage rate for 2025 only if you own the vehicle and used the standard mileage rate for the first year you placed the vehicle in service. So let's say, for example, you've been in business for 5 years. You can actually claim your standard mileage rate, being that you've already placed your vehicle in service when you first started business and you've been claiming that mileage rate. No biggie. Continue to claim your mileage rate. Now, another alternative is if you have a leased vehicle and you are using the standard mileage rate for the entire lease period. If you take the standard mileage rate, we already went over how to calculate that in the previous portion of this video. Now, so essentially it's saying that you can lease your business vehicle and still claim your standard mileage rate. So whether you own the vehicle or you're leasing the vehicle for business, you still are able to claim that standard mileage rate. Now, here are some cautions here. And these cautions are very evident, very flagrant warnings for you as a taxpayer to ensure that you are not audited when you file your tax return. Now, the first caution in this publication reads, if you use your vehicle for both business and personal purposes and you claim a deduction for the vehicle loan interest applicable to your business use. Now, this is stating here, and you see it in black and white, that you can't claim your standard deduction on the actual Schedule C. They're actually telling you that there's another form on your personal tax return that you claim your standard mileage rate, and that is actually on Schedule 1A. So again, if you are using your business vehicle for personal and business, and I know this is going to trip a lot of people up, and of course, if you have any questions about this and you want me to do another spin-off of this video covering this topic, let me know in the comments below. So yes, like I mentioned before, if you are using your business vehicle for personal and business, you can't use that Schedule C. Instead, you have to use Schedule 1A. I have seen, not often, but been in business for over 10 years, I've probably seen this maybe happen one time where a client questioned a client's return, but it was always grouped with business mileage. They claimed it on the Schedule C, and they also claimed it on the Schedule 1A, in addition to charity mileage. And the IRS just wanted to substantiate their claim for claiming that expenses on their tax return. Now, they came in asking for advice. They received this letter, and this is when I brought up the publication at that time that stated that you cannot claim your standard mileage on your Schedule C for your business if you are using that your vehicle for multi-purpose use, meaning personal and business, okay? Now, one more caution before we end this video is if you use your vehicle for both business and personal purposes and you claim the deduction, it says you cannot claim this deduction for that same interest on the Schedule C, meaning the IRS is telling you that you cannot double report, which is pretty similar to the first caution, okay? So thank you guys for watching. If you have any questions, be sure to leave comments below, and I will answer everyone's question one by one. And if you would like me to do a spinoff on another topic, even just associated with the standard business mileage, or maybe charity or military or medical, let me know in the comments below. And be sure to like and subscribe. I will be sharing so many more videos on accounting, tax compliance, bookkeeping, whatever you need, all things accounting will be on this channel. And until next time, bye.